Greeting to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, Market Analyst of GKFXPrime. I'm gonna share my daily analysis for Monday, 19th of June. Alright, so first of all, let's review the major market movement on last Friday, 16th of June. So first, we refer to the movement of US dollars, and the US dollar was split against the basket of the other major currencies on Friday, declined 0.3% to end at 97.14 after weak US housing and consumer sentiment data, which backed the bets of a slower pace of interest rate hikes from the Federal Reserve. So the subdued economic reports weighed on the dollar as it dropped to recession low against its peer. The index ended the week with a loss of roughly 0.1%, and despite the Federal Reserve relatively hawkish message, as market players remain doubtful over the Federal Reserve's ability to raise interest rates as much as it would like before the end of the year due to a recent run of disappointing US economic data. And future trader notes are pricing in less than a 15% chance of a rate hike at the Federal Reserve September meeting. This is according to a Federal Reserve Rate Monitor tool, and the odds of December was seen at about 35%. Meanwhile, the British pound was inched higher on Friday. It is underpinned by expectation that the Bank of England could alter its stance on low interest rate in the near future, after the increasing number of its members voted in favor of a rate hike on Thursday. So on the other hand, the euro also rose on Friday, and it is drawing support after the IMF, the International Monetary Fund, and the 19 finance minister from Eurozone, which backed a payout of 8.5 billion euro to Greece in order to default in July and avert another debt crisis. Looking into commodities market, gold price was ended a bit higher on Friday, up $1.90 or about 0.2% to close at $1,256.50 a troy ounce. But however, the yellow metals is still logged its second straight weekly loss after the Federal Reserve hiked rate and maintained the plans to go ahead with another increase by year end. As for the oil price, the US West Texas Intermediate crude oil price was inched up 28 cents or around 0.6% to end at $44.74 a barrel by close of trade on Friday. So the concerns that the ongoing rebound in US shale production is derailing efforts by other major producers to rebalance the market remain in focus. So the data from energy services company Baker Hughes was shown on Friday that US drillers last week added rigs for the 22nd week in a row. So the longest such streak on record, implying that further gains in domestic productions are ahead. So the US oil rig count was rose by 6 to 747, extending a year-long drilling recovery to the highest level since April 2015. So the increase in US drilling activity and shale production has mostly offset the effort by OPEC and other producers to cut output in a move to prop up the market. So last month, OPEC and some non-OPEC producers extended a deal to cut 1.8 million barrels per day in supplies until March 2018. So far, the production cut agreement has little impact on global inventory levels due to rising supply from producers not participating in the accord, such as Libya and Nigeria, and a relentless increase in US shale oil productions also pressures on the oil price. So now we are going to review the highlighted economic data that released on Friday. So on Friday, the Bank of Japan was kept the interest rates unchanged and hinted that ultra-loose monetary policy could remain in place for a while in the press conference soon after the release of latest interest rate decisions. So the governor, Haruhiko Kuroda, said there was some distance to achieving the BOJ's inflation target of 2%, and this was adding that it was inappropriate to say how the bank would assist if massive stimulus programs. So As for the Eurozones, the inflation in Euro was met the expectations of 1.4%, and in US, the home building fell for a third straight month in May to the lowest level in 8 months. So that was just missed the focus of 1.250 million, fell from 1.288 billion to 1.168 million, and this suggesting that subdued housing activity could dent economic growth in the second quarter. In a separate report from the University of Michigan said the consumer sentiment gauge fell to 94.5 in early June from 91.1 in May, and analysts had expected a reading of 97.1. So, and the last data on Friday is the US oil rig count, which is rose by 6 to 747, extending a year-long drilling recovery to the highest level since April 2015. Alright, so now we're gonna have a look in technical analysis, and the first instruments we got here is GBP USD pair. So the pound was traded lower against the US dollar in 4-hourly charts and currently was struggling below the resistance level of 1.2786. Right, so according to the MACD, okay, which is the indicator window below the chart, showing that the both movement line of the MACD was pointing upward now, and the upward momentum is still quite strong. Okay, so it is considered quite strong. So it is expected to move further higher after the price closed above 1.2786 of resistance levels. Then we can aim for the next target at 1.2885. Okay, this is just the next resistance levels, right? In Eurozone, the euro was traded flat against the US dollar in 4-hourly charts, and as we can see, the price was rebound from the lowest level of the recent trading range and currently was hovering between the both moving average lines. So it is expected to move further higher as it is still remain traded in a range between 1.128 and 1.113. So we can aim for the next target at 1.128. As for the US dollar against the Swiss francs chart in 1-hourly, so we can see the pair was traded higher and currently hovering between the both moving average line as well. So it is expected to be traded in a range between of 0.9763 of resistance levels and 0.9730 of support levels. So according to the MACD, which showed at the window below the chart, both of the movement line in MACD was narrowing and moving ranging. So which means that the USD CHF pair probably will be traded flat in a short periods, okay, and it is predicted to be traded in between the range of 0.9763 and 0.9730. So a rebound from the current levels and closing slightly higher than the previous candlesticks might be a signals for another upside movements, okay. So as for the USD CAD, the Canada dollars, okay, so the pair USD CAD in 4-hourly charts is traded lower, okay, following the trend directions and moving down trend lines. So it is expected to be traded towards the next target of support levels at 1.3143. So closing below 1.3143, then we can aim for the next target at 1.300. Okay, 1.300. So based on the indicator, the both movement line is remain pointing downward now. So indicates that the trend direction is still remain pointing downward. So on the other hand, the Asian markets, the New Zealand dollars, Kiwi against the US dollars was traded in an upward trend, okay, and currently heading towards the previous high at the resistance level of 0.7318, okay. So the trend direction is continued and it is expected to move further higher after the price closed above 0.7318. Then we can aim for the next target at 0.7380. For the Aussie, The AUD-USD pair is traded in an upward trend as well. Okay, so currently was hovering below the previous high or the resistance level of 0.7634. Alright, so closing above 0.7634, then there will be another huge gap for it to move further higher, and the next target will be at 0.7750. So the trend directions is pointing upward now, and the trend momentum is quite strong. This is according to the indicators. The both movement line, which is the remain pointing upward now. For Japanese yen, the pair USD JPY in 1 hourly chart will retrace back from the recent high at 101.40 and currently was hovering above the 20 moving average line, okay, which is the red column line attached in the chart. So according to the MACD, the both movement line in the MACD was narrowing and moving flat now. Okay, so the downward momentum is decreasing as well. So in short term, it is expected to move slightly higher, probably towards the previous high or the resistance level of 111.40. So closing above 111.40, then we can aim for the next target at 112.10. Otherwise, rejected again by the resistance level of 111.40, probably it will be traded flat between the range of 111.40 and 110.80. Looking into commodities markets, the gold price is continued to be traded lower and currently was retraced back from the resistance level of 1255. A try out. Okay, so closing below 1250, probably it will move further lower towards the next target of support level at 1245. Okay, 1245. So the trend direction now is changed to the medium-term downtrend according to the both moving average lines. Okay, which just form a death cross and pointing downward now. And as for the oil price, it was continued its downtrend, okay, and the both movement line is remained pointing downward as well. So this is the signals to pressures on the oil price for it to go further lower. And the next target we can refer to 43.74 a barrel, okay. So closing below 43.74, then the further target will be at 42.2, okay, 42.2. All right. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.